Welcome to IITW.com. Friends, in this stock market analysis video series, you are going to learn our advanced course. Our advanced course is based on neo-wave theory and DPB, the contrary trading system. In this course, you will go through 6 different units. Unit 1. Basic Technical Discussion. This unit is divided in 4 chapters, with some basic discussion of technical analysis, Elliott wave theory and neo-wave theory. Unit 2. Basics of neo-wave. This unit also divided in 4 chapters discussing basics of neo-wave theory. Unit 3. Advancing in neo-wave. Advancing in neo-wave unit is a central part of neo-wave theory, which covers logical rules involved in process of induction and deduction. Neo-wave's new emerged patterns. New emerged patterns unit is divided in 4 chapters, discussing all about new emerged patterns. Unit 5. Trading with neo-wave. As name suggests, this unit solves trading-related difficulties with neo-wave theory. This unit have focused on understanding trading psychology, risk management and trading with all types of patterns. Unit 6. DPB Detached Potential Bar, the contrary trading. This is a special supplementary unit added in this course. The DPB provide you a trade with small risk and big reward. An important feature of this research is that the DPB enlightening you with the idea that when particular neo-wave pattern will end, before first and second stage of neo-wave confirmation of patterns. After watching last video series of technical analysis, it would be clear for you that trading or investing are having 4 core elements, that is, psychology, risk management, analysis and trading setups. What happens with us? Unfortunately, we don't understand the most important element, that is psychology and risk management. Most of traders directly jump towards trading setups. The most unfortunate thing is that most of people don't want to learn analysis. They are only interested to learn trading setups, that is, short strategies and some tricks. Why? Maybe either they don't have time, or they fails to understand that these tricks and strategies are only one part of whole system, not itself a system, and these tricks will not work best if not acquired knowledge of whole system and practiced judiciously. Because our video series are related with analysis, and this current video series you are watching is about neo-wave analysis, thus by default, you are in process of acquiring and practicing with knowledge of whole system. Friends, may you will have question why to learn tedious process of analysis. Let me answer this question, that why we need to learn the tedious process of analysis. I would like to present 2 different scenarios. One is drive at new area and second is drive at known area. Scenario 1. Drive at new area or unknown area. Imagine a scene that you are at some new area. You are unknown with road maps of that area. In this unknown area, you have to drive 20 kilometers. Unfortunately, this unknown area is remote area, where roads not having vectors like milestones, direction boards, etc. Imagine how driving will become difficult for you. Even you are excellent at driving skills, but driving will become difficult for you. Distance after distance, where you face crossroad, you need to stop your car and ask someone about the direction of your destination. Your driving becomes sluggish and difficult. Why? Because absence of road map in your mind. Due to absence of road map in your mind, you don't have clarity about road direction. Due to lack of clarity, you are stopping at crossroads and asking someone. This hurdle make you sluggish and may consume your extra time, money and energy. Scenario 2. Drive at known area. Imagine the same scene but only difference is that this area is known for you and roads are also well known for you. Yes. In other words, a road map is ready in your mind, means you are too clear about road and direction. How easy it becomes to drive now. For sure you will have very easy and swift drive experience. Why? Because you merged road map with your driving skills. Merging road map with your driving skill for sure better than being dependable on mere driving skills. Likewise, trading ability with small tricks or strategies is only driving skills. While merging your trading skill with analysis is always better because it provides you a roadmap called trade map. This means analysis prevents you from losing money, energy and time. As per technological evolution, the world of trading or investing has gone through at least 5 major phases as technology has progressed. Phase 1. Personal intuition era. In oldest days, before hundreds of years ago, there were no reliable news outlets and no market data was available, thus, trader had to rely on hearsay and rumors to make trading or investing decisions, and leaving a final decision much over personal intuition. Phase 2. Fundamental analysis era. Post telecommunications technology invention, and with more advances in equipments, it became possible to access the market data and business news. This time had emerged fundamental analysis era. This phase would include analysis with macro and microeconomics data, like foreign policy, foreign investment, GDP, PE ratios, EPS, market cap, revenue growth, debt and dividend ratios, etc. Phase 3. Technical analysis era. With evolution in technology, next phase became popular in practice, and that is technical analysis phase. This phase was required data of open, high, low, close and volume for each period. People started to plot these data on chart and study collectively Dow theory, Gann's techniques, moving averages, momentum indicators, lagging indicators, price patterns, trend lines, open interest, volume, various types of charts, etc. Phase 4. Elliott wave or psychological analysis or golden era. Merging of phases 2 and 3, new era came in existence, that is, the golden era of psychological analysis, which is what Elliott wave is all about. This type of analysis includes pattern recognition, Fibonacci price and time relationships, and the science of fractals. Phase 5. Neo-wave analysis era. Glenn Neely introduced a new paradigm of self-definition to the field of market analysis and trading. Neo-wave is not just a way of forecasting market action, but a new way of trading based on observation. Neo-wave is the first logical, well-organized, self-defining, and self-confirmatory process of market analysis and trading. Before going forward, we must need to understand 2 different approaches of analysis and aspect of trading or investing purpose. First is proactive approach, that is forecasting approach, which give us idea of trade prior to price move and we make our trade plan before entry setup triggers. Another is reactive approach that give us idea of action, what to do, in present condition, according to price moves on our screen. Remember, our trading should be combination of both approaches, because forecasting clarity is good at beginning and at end of pattern, but not in middle of pattern. During market hours, you may have observed that price always moves from one point to another point, either higher or lower as compared with previous price. Why? Price moves from one point to another point, higher or lower? Answer is price moves from one point to another point due to difference between demand and supply at particular time and particular counter. Accepted. Price moves from one point to another point due to difference in between demand and supply, but why? There is a difference in between supply and demand. Answer is simple. Due to difference between price and value. Let us understand price and value. Price is a rate or consideration which you are looking at present and ready to pay or receive, while value is the price in future days or months or years which you want to receive or pay in future. In short, price is reality of at present, while value is perception of future price. Fact is that due to this perception of value, people think, either buy or sell and act accordingly. Let us understand with an example. If stock is trading at US $1,000, someone may think that particular stock is cheap and it can achieve value of US $1,500 in a year, so he can buy. On other side, someone think that this stock is costly at US $1,000.00 and may it can depreciate up to US $7 in a year, so he want to sell. We can notice here that price is US $1,000, but valuation are different, that as US $1,500 and US $700 in year, in perception of two different individual. This difference makes one person to sell and another to buy. Like this, millions and billions people involved in this process of buying and selling, and due to this reason, price always seen moving from one point to another point, either up or down. Now, it is clear that price moves are a result of millions and billions people's perception related to price and valuation. In simple words, market moves on the mood of mass psychology. This would bring forward logic that mass psychology having mood with particular valuation, this causes imbalance in demand and supply, and this imbalance causes price movement in trends. What is trend? Perceived tendency of price to move in particular direction over a time. There are three types move we can see about stock market price behavior. Uptrend. The price move, starting from particular extreme bottom towards upside and creating series of successive higher high and higher low is called as uptrend. Downtrend. The price move, starting from particular extreme top towards downside and creating series of successive lower low and lower high is called as downtrend. Sideways. The price move, which start from particular bottom or top, but not create series successive higher high and higher low, or the series of successive lower low and lower high, is called a sideways move or sideways trend. Now we've seen the price moves in trend. Have you thought, what is the force present behind these moves? Yes. I know, now you will reply that involvement of mass psychology mood at particular direction of valuation. Trading and investing. From last few slides, we reach a conclusion that trading and investing have four core elements, that is trading psychology, risk management, analysis and trading setups. Analysis adds a trading map to your trading skills. New wave theory is latest era of analysis, trading and investing. Analysis having two approaches towards trading and investing, that is proactive and reactive. Proactive approach proves helpful at the beginning or at the end of pattern, because at beginning or end of pattern, high degree of forecasting clarity available. While in mid of pattern, there is lack of forecasting clarity, so in mid of pattern the reactive approach proves helpful. Price move is due to difference in between supply and demand, and this difference between supply and demand is result of difference in opinion of traders or investors about valuation at particular time. Price move involving mass psychology, and this price moves creates trends. There are three types trends: uptrend, downtrend and sideways. 1. Basic technical discussion. Chapter 1. The law of nature and golden ratios.